Morning from Sunoco Global Trading to our clients in the US, and good afternoon to those in London and elsewhere. I wanted to talk to you today about palladium. Why? Because palladium is a good indicator for the direction of platinum, which is often perceived as being fundamentally a safe haven asset by some segments of the market. Well, neither platinum nor palladium are in fact safe haven investments, as we can see from the chart here. Um, that actual price movement is down to some other differentials, which I'll mention to you soon. But actually, palladium is something like 50%, 57% of all palladium is used in industry, in catalytic converters in cars. So that means if the growth profile of a country is looking negative, as it is in China, US, and the Eurozone, so pretty much everywhere that counts, uh, then then nobody is going to want to make a major purchase. Major purchases obviously include houses, which is why housing data, broadly speaking, across those three regions is negative in real terms, and nobody's going to want to buy a car either. If you've got no money and you're living on leaves and living in a cave, you don't need a car. So, in terms of palladium, then we see that. Oh, but these charts are brought to us by our friends at FuturesTradingCharts.com, splendid firm. And as you see from the support levels around here, 580-ish, but as you also see, it absolutely fell out of bed in the last few days. This is palladium chart we're looking at. So it lost pretty much, 80 dollars an ounce. Now, why does this matter aside from that? Well, the other thing is that there's a difference to highlight here between platinum and palladium on the one hand, and gold on the other. Silver sort of falls in between the two. Gold is a safe haven asset principally. Um, it is obviously used in jewelry, but principally it's a safe haven asset. Gold's upside is capped at the moment, and has been for some time, by central bank selling of gold in the market. And why do they do this? Well, it's quite simple. Because if you're a central bank and your currency is going down the toilet, then you will try to deter people selling your currency, liberating that money and moving it towards gold by keeping the gold price down as far as you can. We've seen that all across the region in the Eurozone, principally. So that's why gold is still not breaking through $2,000 an ounce, which is where it probably should be based on the capital flows. Now, on the other side of things, you've got palladium and platinum. Now, palladium and platinum, their two principal uses in industry are in catalytic converters. And as I say, if you've got US fiscal cliff, painting a very grim picture for US economic growth, you've got the same thing in China, and you've got the same thing in Japan and the Eurozone, then nobody is going to buy it. Simple as that. Silver falls in between because it has some uses in industry, and it has some as a safe haven. In fact, quite interesting, according to CFTC data, investor holdings of silver are near record levels still. And at the same time, silver held in exchange traded products, ETPs, or ETFs, have climbed for 3 months and are now valued at over 16 billion actual dollars. That's according to CFTC data. And prices of precious metals, with the exception of PGMs, tripled when the Fed last bought around 2.3 trillion of debt in the previous two rounds of quantitative easing from December 2008 to June 2011. Having said this, hedge funds have reduced their positions based on higher prices by around 70% since the end of February of this year, so 6, 7, 8, 9 months ago. And their copper positions as well. We heard some talk recently in the market about copper being on a bullish trend. Well, why? Why possibly would it be on a bullish trend? China is a key, the key importer of copper anywhere in the world. Chile, by the way, is a key exporter. So why on earth would copper possibly go up? Something like the same amount of copper that you get in an Olympic-sized swimming pool is used in every single normal house building project. And if you're not building houses, you're not using copper. Quite simple. That's it. So Basically, the prognosis at the moment, our prognosis, were we to be investing, is it depends where you're long of gold. But if you were long from a sensible region, we know of people that were long from $500-600 per ounce. It's a very good idea. They've been trimming back on longs, but nonetheless, it's a very good idea indeed. If you were fortunate to have that, then you should have trimmed back and taken some profit. But if you're long at anywhere in the money at all at the moment, it's probably a reasonable bet that your position would yield further fruit after the US presidential election. Why is this? Well, again, barefacedly political. Of course, any new administration coming in wants to make sure that he greets the electorate with a whole slew of positive economic data 2 or 3 months down the line, and so they shamelessly embark on a Keynesian idea, pumping money into various infrastructure projects, or indirectly into, for example, further bond buying programs. We're expecting further QE programs before Christmas of this year. So, as you can see, that would naturally prompt a surge in gold prices for two reasons. One is that economic growth prospects always give people a sense of confidence, and people like to invest in all sorts of things when they're feeling confident. But the second thing is, if you've got lots of money being pumped into the system, then the natural tendency for the currency in that system is to diminish in value, supply and demand equation being equal. So therefore you move into gold, something you can keep in the basement if you have a sufficiently large basement. Palladium and platinum, well, I wouldn't be going long at that anytime soon, I can tell you. I would have thought, as I say, around. I mean, these are the key levels here. So around 580, that's your key support level. If that breaks, then you're looking at here, which is what that would be, 570-ish. The interesting thing to look at as well in conjunction with this is the RSI, which is a relative strength index. It's only 37.99. Traditionally, 70 is the upside. So if it goes over there, it's overbought, and if it goes under 30, it's oversold. But you can see, if you add this into this, then even with this massive fall, it is still not oversold, which means there's plenty more legs in the downside. That is where we leave it on the metals side of things for the time being. Silver, well, again, I would hold tight on that one. In fact, I probably wouldn't do anything. Well, certainly not this week. Probably time to have a beer. All right, I'll leave you to it. Have a good day. Cheerio.